Hey everyone, it's Nick with Us versus Herd. If it's your first time here, you like the content, hit subscribe. We go live 30 minutes after market close, Monday through Friday. If you want to get notifications, tap the bell, and you'll get notifications from when we go live or when we post other videos. If you want to join the UVH fam, you want to get connected with our community, we have links below to our free options trading group along with our Discord. As a pretty crazy Friday for a change. No flat Friday here. You know, Dow is down 460, S&P's down 54, NASDAQ down 170. Woo! Woo! If you're here right now, say what up. We got FC. Brendan, how you doing, man? How's it going? Jeff, Matthew, how you doing? Hope everyone had a good day. Hope everyone stayed safe today. You know, we'll see what's going on. Jeff, how you doing? Yeah, anyways. Reworts, Daniel, nice to see you guys again. Haviz, hello. How's it going? Yeah, so yeah, I mean, we almost had a 500-point down day on the Dow. Hey Billy, what's going on? Just getting things. V's learned a 1K lesson. No. Harish, what's going on? Rich, nice to see you again. And yeah, today I was playing safe, but I've been playing safe all week because it was a short week for me because Monday was a travel day for me. Monday I was traveling. Tuesday was my first real day here, and now Tuesday through Friday is all I really did here since I was off for a week. Shadow Drone, what's up? If you made money today, comment got paid. If you lost money today, comment learned a lesson. Billy learned a lesson, made money. Nice. Steven, welcome. Glad you made it. Today I got paid a little bit. I'm up like 40 or 50 bucks on just one account. Like I said before, I'm only trading on one account. Normally I trade up to 4 accounts, but right now I'm just trading on one account just to get kind of warmed up to the market after being gone for a week or so. Just getting warmed up. Small gains. I had a green week, so I can't complain. However, I had some positions on that I took off too early. I think a lot of us left a lot of money on the table today with positions that we had. I know at least the people in the Discord, you know, FC made $9. Matthew learned a $100 lesson. Yeah, I mean, there's nothing wrong with losing money, but you have to identify why you lost money and are you continuing to lose money? Why are you losing money? And always just kind of reevaluating yourself. But also when you make money, you have to evaluate why you're making money. Because as you guys know, win streaks don't go forever. Losing streaks don't go forever. You gotta always be evaluating your emotional health, your mental health, and what the market is doing. Stay green. Rich UVXY for 200 bucks. Nice. My payment was left in the 282. Yeah, so that'll be the first trade that I cover right now. So we'll go to my let me make myself a little smaller here so we can so you guys can see my trades here. Yesterday after market close, we'll talk about. Well, I'll show you guys here. I did a SPY trade. So yesterday at 3:04, so about 4 minutes after market close. If you didn't know, you could trade SPY up to 15 minutes after market close. So when the market closes, you could trade SPY 15 minutes after market close. However, if you're on Robinhood, you're basically SOL. Yo, Tan, what's up? If you're new here, if you just joined, say what up. So yesterday after market close, I bought a SPY put. I bought the 282 put. Not for today expiration, for actually Monday expiration, March 25th. Give myself some time. It was 38 cents. And I think like most people, I got kind of tripped out here on the first 15-minute candle. It looked like it was making a push towards 284. You know, so I sold it for 55 cents, bought it for 38 cents, bought it for sold it for 55 cents. I mean, that's a 44% return. You can't complain about that. But if you're looking at these puts that I gave up for cheap here for the Monday expiration, I mean, I sold it for 55 cents. I mean, you made money, but you know, we caught the lows pretty good. So I bought it for 38 cents yesterday after market close, and it ripped all the way up to 303 today. I mean, just crazy, crazy. Harish, on TD Ameritrade, Thinkorswim platform, you can trade after 4 p.m. Yeah. Yeah, so I mean, I sold it, but I mean, this week I've been making money, but my percentage gains have been smaller. I've been capping them at like 20%, 30%, 40%. I think I had a 60% winner the other day, but I haven't gone to like 100, 200, 300%. And you're like, hey, why aren't you letting it run? Why you give yourself enough time for the trade to work out? Why aren't you doing that? Is because before I left for vacation, before I left for Mexico, I basically regretted every time I didn't take those 20%, 30%, 40%. And now I'm back. My win rate is back at like 90% versus when I left, my win rate was like 30%. So, you know, so I'm going for the more frequent, smaller returns versus, you know, versus holding on and you're like, well, you're stupid because you didn't, you know. But you know, at the end of the day, you didn't know this was going to happen after having a huge up day to give it all back and then some. I mean, nobody here can tell the future. I don't care what they say. You know, nobody here knows the future. However, looking back, it does hurt when I gave it up for what, 55 cents and it hit a high of 303. However, I guarantee you, since I sold this first candle here, it was like it reached a high of 69. I definitely would have sold the $1.39 pop here. I would have sold this. I would have sold this for sure, especially when it started to pull back here. So, you know, I would have never made it to $3. Like I would have never made it there. And I don't think, you know, unless some people do, but in the market we were just in right now, volatility has just re-entered the market, but in the market we were in for the last few months, you know, these kind of things go to zero. And yesterday it saved me. Yesterday I had an IBM put. I closed it out for like a 30% profit. Would have been max loss today. Would have been max loss like yesterday. So you don't know. That's the thing, is like you don't know which ones are going to be your winners and you don't know which ones are going to be max loss. But if you stay diligent in taking your gains and being consistent, your account's going to grow. Chitty, what's going on? Gold.Walker learned a lesson. Right. I have the PDT rule, so I bought long puts on SPY. Nice. Yeah, Daniel, days like these are rains. Take your gains. I think, Daniel, you had a good day today, right? I think I saw in the Discord you had a good day. Congrats. I think you said you doubled your account, right? Congrats on that. Yeah, I mean, you always have to think about in terms of, you know, some people go for the quick gains and the big fluctuations in your account. Just know that like when people go like, oh, I'm gonna have like $1,000 win, they take $1,000 losses too. There's big swings in your account, so you have to do what you're comfortable with and trade accordingly to what you want to do. You know, everybody wants to make money in the market, obviously, but what kind of swings in your account are you willing to make? You know, what kind of sacrifices are you willing to make? Because trading in the market, as you guys know, now that you've traded for a while or new, you know, nothing's free. This is not free. This is not free to play. We have to give up something, just like in life. You know, if you want something, you got to work for it. And just like the market, if you want something, you got to work for it. IBM puts would have gone to zero, but they definitely hit again. Yeah, I did. ST, I did play IBM a couple times this week. Puts took some quick gains, but they were short lived. So that's why I've been taking my gains off the table. Let's talk. MU was my other trade. Let's talk about that. MU, I bought this morning. I bought a bearish strangle for next week, 42.50 put and $45 45 strike call for $1.08. I sold it 2 hours later for $1.26. And you're like, well, why did you sell it? You have it till next week. And I'll show you why here. So I have MU in the bottom right corner here. So, like again, small gains, consistent gains is what we've been shooting for all week. We've been hitting our targets, so no complaints. The reason why we took advantage of this drop here, we got in the money. We were up about 15% or so. Nothing huge, but it was really consolidating and going sideways. And I was kind of afraid of the rip up that it might go to 43. So my plan was take it off. It's kind of consolidating. Take it off. You can always re-enter. So like if you have profits come and go, but you could take the profits off and always re-enter. Always re-enter it in a new trade if it's still a trade that you believe in, if it's still working out. So I took some profits off the table, mainly because I want to continue having a green week. I want to keep building the account, even though we're making some small gains here. But I was afraid that I was going to do something like, SPY started to take off before it sold off end of day last hour. Just really sold off. MU was kind of looking the same way. I didn't want to go back into the money. I had the 42.50. I had the 42.50 puts. I was in the money, so I took the money. And then later on, about 30 minutes before close, 2:30, which is 3:30 Eastern time, I put another strangle on for $1.06. I bought the 41 put and the 43 call for next week on that one. So, right now, actually, I think I'm break even on that one. Yeah, we're break even right now on that. So I put it on for $1.06. So I still have that trade on. Jimbo, what's going on? Jimbo Slice in the house. What's going on? Towen, what's up? So MU is actually the only trade I'm holding over the weekend right now. I cleared the decks. I wanted to start clean for next week. GLD took a little bit of a loss on it, but I'll show you here. GLD opened yesterday at 11:15 a.m. I bought the 123 put for 37 cents. I sold it back. I sold it today for 22 cents. So we took a $15 loss on that, on GLD. And I'm glad I sold because it was just chilling all day. What was the 123 put going for at close here? Let's take a look. 123 put. So yeah, I would have got a little bit more for it, but not much. So I sold it for 22 cents, which was close to the low, which obviously doesn't make you feel good, but really tight range today on this. Not a whole lot of action. As you can see, GLD pretty much consolidated, and it looks like it's going to be looking more bullish, especially as the market runs. Gold is starting to run with the Fed and everything. Chewy, Yellow, what up? Jimbo got paid. Glad you got paid, Jimbo. So JLD was a small loser today, but we cut it a loss. And the other thing that I'm doing is I'm not letting my winners run, but I'm also making sure my losses are capped. So I've been very disciplined this week, and I would say that it's paid off. I probably could have made a lot more money if I let it run, but why take the chance? JP Morgan was another one. Let's get that trade up here. So yesterday I placed a strangle on JP Morgan. It was actually a bullish strangle because of how far it went down. And we were resting at like the 102 support area, which wasn't very strong support, but I thought it had a good chance of bouncing if we had a green day today, or the banks had a green day at least. The JP Morgan, the banks are not following. The banks are not right now. They're not following the indices, mainly because of the Fed and the inverted yield curve and the bonds and all that stuff. So I put it on yesterday for $1.57. I took it off for $1.75 the day. And you're like, why did you take that off? Why did you take off that? You were in the money. Why did you take it off? I was in the money on the 100 put. Is because I had a bullish strangle. I had a bullish strangle on, and I have JP Morgan down here, right here in the middle. I had a bullish strangle on. It came down. I wanted it to go to like the 104 or 105 area was my target. So kind of up here, 104. Obviously that didn't happen. We had all morning we just sold. We just sold straight all morning, and then we came down here, and I was afraid that we were going to pop up to like 101 or have some sort of consolidation. So, which we did have, just consolidation, didn't go anywhere after that. I actually thought the market, after the huge sell-off, it would just consolidate like this the rest of the day and just kind of burn that premium. So I was reducing my risk. So I was making money, you know, and I was actually hoping after I took it off that it would come down to like the 98 area, so I could buy a call at like 101 and a put at like 97, because on JP Morgan, what I'm looking at on JP Morgan was, you know, there's really nothing here to get it to like the low 90s. This could easily revisit the low 90s. I mean, 95, it bounced a little bit. 96 area bounced a little bit, but not much. So I was thinking if it could break, but I thought that, you know, in the bull markets, the V chart happens all too frequently. Like the V chart just rip. And if you don't know what the V chart is, I'll show you right here. IBM did one the other day. This is what the V chart looks like, if you don't know. So in a bull market, you got to be very careful of this, because it happens a lot. It happens a lot. And actually today, you know, that's why because you can't predict the future, especially like on SPY. It tried to, like if you look at this, I mean, it tried to come back, but it failed, obviously. So you got to be very careful of the V chart, because if you're bearish, it wrecks your life, man. It wrecks your life. So I don't know how else to say it. Chitty. Yeah, I'll answer your question here in a second. So that's why I took it off, and I really wanted to have a green week. I had some profits, and I'm glad I did. Let's see what that JP Morgan strangle's worth now. So I had the 100 put, the 103 call, let it go for 175. So let's see if it would have paid to hold. Let's see here. 100 put. So in this case, so let it go for 175. It's now worth 169, which I'm guessing I won't get filled there. Probably like 168, 160, 167 maybe. So in this case, the strategy worked because it ran, you know, JP Morgan ran sideways. So JP Morgan ran sideways and it came down a little bit. So, you know, we caught the move here. We caught the move. When a position goes against you, like if you have a bullish strangle on and the position goes against you and you're making money, you know, you should be thankful you're break even, because that means your protection in place. That means your protection in place was triggered. You're break even. You probably should get out and realign the strangle or realign your position. But in this case, I was in the money. My protection got triggered and I was profitable on the entire strangle, so I just took the whole thing off, and I'm looking to re-enter on JP Morgan or Goldman Sachs probably next week as well. So there was quite a few trades today. So small consistent winners. I think that was all my trades for today. For that, but yeah, I mean small consistent winners. Let's see here. OKTA. I don't know. I think. Let's see. Okay. So I think the reason why you think that they're expensive is because they're $5 wide strikes, and the expected move on them is, you know, they only have monthly expirations. So the earliest you could buy is 27 days out, so that's why they're a bit more expensive. Also, they're only $5 wide strikes, so it makes it tough to trade. And the expected move in 27 days is 10%, more than 10%. It's expecting an $8.43 move, and the stock is $81. Is probably why it's looking expensive to you. I mean, 10% move. I mean, it has moved. It has moved like 10, 15 bucks, but you got trading anything with $5 wide strikes like this, especially on an $81 stock, it makes it a tough trade. Makes it a tough trade. Yeah, Steven, I'm with you. I'm with you, especially when you took a break. So let's talk about SPY. I think I've talked about this before. Whether you want to talk about SPX or SPY, I think most people only want to talk about SPY because they can relate to it because they trade it a lot. Excuse me. But you know, we had a big down day. I mean, SPY was down $5.50, almost 2% down day. And if you guys don't know, like in 2017, we went like a record amount of days without having a 1% move up or down. And when we have volatility like this, we had over a 1% move up yesterday. We have over almost a 2% down move today. I mean, that's crazy. So that's why you gotta trade safe. And also, when you're in this environment, you know, don't expose yourself to a lot of risk on one side. Like, don't go full bearish or don't go full bullish, because this would have wrecked your life. What a lot of people do is they start chasing, and FOMO starts kicking in, and they start making money, and they think there's going to be, you know, some people have in their mind that, you know, runs continue for a couple days or drops continue for a couple days. Like, for some reason, the number 3 is like, oh, when something goes sideways, you shouldn't trade it for like 3 days. Or when this does this, you shouldn't do it for 3 days. Or it's going to go this way for 3 days. For some reason, people always say that. It makes no sense. You know, there's this 3-day rule, but it's not really a rule, because it doesn't really. I mean, you're probably going to lose more money than you are with the 3-day rule. Anyways. So FOMO caught up, and you know, people are like, okay, we're way above resistance now. We're at 285. We're going to be pushing 290, all-time highs. We're going to hit 300. You know, easy. And then they just got obliterated today. So that's what FOMO does. You know, it gets you to load up, and then, you know, to be honest with you, it wouldn't be very surprising if they ripped it back the other way. Yeah, Matthew, good idea. H7, what's going on? So, you know, that's why you got to reduce risk, and that's why I've just been taking my gains along the way and not trying to have like triple baggers or anything, just trying to trade safe and trade consistently. And I think that is what you guys want to see anyways, but you don't want to see me, like, you know, having 10K losses and stuff like that, and I don't want to have those. So, you know, what I will say though is that, like, SPY, this 280 area, which we've talked about before, you know, was previously looking like resistance, started to become some sort of support. We would go up, we would revisit, we would go up, we would revisit it, and now we're kind of at this tipping point where we're back in under 280. So the question is, is this just making some sort of support here? Because overall, this red candle, yes, we had a 2% down move. But overall, in the overall trend, it doesn't really matter. Like, it doesn't. Today's. I mean, it just looks like more consolidation. Like, a year from now, you look at this candle, you probably won't even really notice it. You know, like, what's going on? So we need Monday for. That's why I didn't really like load up more. Did I go more short? Or go more long? You know, I didn't like load up the calls. I didn't load up the puts. I didn't like, okay, well, I think we need Monday for confirmation, and that way we can see if we're going to revisit the 275 area, or are we going to revisit 285? You know, I don't think a bad range would be to do 285 to 270 for a while, but I think there's going to be a lot of fear in the markets because people are thinking that there are some sort of recession is going to happen, because one of the key indicators in the 2007 recession or 2008 recession, in 2007, there was an inverted yield curve, and today there was an inverted yield curve, the first time since 2007, which they said is an indicator. But I mean, indicators are indicators. At the end of the day, you know, it all depends on job growth, earnings growth. You know, people buying houses, people selling houses. But I think a lot of people are scared because, you know, the Fed pumped its brakes saying no more rate hikes for the rest of the year. Also, we're going to have a global slowdown. So that's kind of spooking people right now. However, I mean, I don't think it's that serious, but as you can see here, these little sell-offs here back in October turned pretty serious pretty quickly. You know, we went from 293 down to 260. And I think because we went so high so fast, like the next recession, you can't say we're never going to have another recession. We're going to have another recession. There's always going to be another recession. We just don't know when it is. I mean, we're going to cut the stock market's going to be cut 50-60% easy. If I was a lion bagger, Walter Payson was the stock market. I thought the market was going up today like it always does. You can't trade like that. You gotta trade the directions and go for the key areas of support and resistance. Which brokerage is cheap to open an account? I have E-Trade. They charge a lot for options. I will pay a lot for long term. Nelson, Tastyworks. Tastyworks, $1 to open a trade, $0 to close, and then they cap commissions as well. On the cap commissions if you buy like more than 10. Hit me up on a DM if you want more information later. Hit me in my DMs. 2720 SC. Oh, 2820, 2850. Yeah. Slide in those DMs. Yeah, you can hit me up. You know, feel free to hit me up on Facebook or Discord. I answer all my messages. So, you know, there's a lot of people that like, oh, sorry for bothering you. Sorry for asking. You know, it's not a hassle. It's not a hassle at all. I answer questions all the time. Sovan learned another lesson. If you're here right now and just joining, say what up. Let's take some requests. What you guys looking at? MU for me. I think I talked about it, so I have that position. I'm looking at like the 40 range now, down in here in the 40 range. Appreciate you, Billy. Appreciate you, man, for real. So MU, I'm looking at the 40 range here. Kind of revisit this area, so that's why I have the 41 put for next week. I think I'm going to exit that put. If it comes back up to 42.50, maybe even 42.30, I'll probably cut that and reevaluate what I'm going to do. Dariana got paid, nice. I think you're right, FC. We need some enlightenment on Monday, I think. Baron, welcome. Learned a lesson. Hope those lessons aren't too big, man. You know, and there was a lot of people. I actually held back a lot today too, because over trading on days like today will definitely cost you. Yes, I think today in terms of SPY, you could have day traded this. You know, there was nice two-sided actions on SPY and a lot of other trades. I don't know about Apple, but over trading would definitely Apple. I was thinking getting a put on Apple, but it was holding pretty well. Should have, when it broke the 15-minute low at 194, I should have put a position on. Yep, we should have put a position on. Let's see what those 190 puts we're looking at. I thought 190 and there's an event. There's an event on Monday for Apple, so didn't want to. I don't like trading those events. Yeah. 90 cents, 291. Nice triple return here. Yesterday they were going for about $1.12. Oh, Baron only lost $36. Nice. Does MU link to AMD? They do correlate. The chip stocks kind of all move together. I would say, like, you know, however, today's charts all kind of look the same. I mean, JP Morgan looks like AMD's and Nvidia's looks like JP Morgan's, and I mean, they all look the same. You know, IBM I think was the most violent today in terms of that rip. I mean, that was crazy. However, I mean, I think, you know, there was a couple ways to make money on IBM this week. You had to catch the areas of support. So, you know, I did short it a couple times, made some money on it. I actually did, oh, I forgot to cover. I did have, I forgot to cover that. Let me pull it up. I did do IBM. Forgot on here. Let me clear this up for you guys. I did buy IBM 140 put today for 99 cents, and I sold it for 98 cents. So I lost $1 on it, just $1. And so I bought it at 908, sold it at 937. So let's see, IBM. Let's get that 140 put working. So we left some money on the table there. I was just afraid of. So on IBM here, 908. Let's zero in on today. 908 was right around here. I bought the put. I was looking at the 140.50 when it came back. So when it came back up to 140.50, my execution on the entry was really, really nice, I think. I was looking at 140.50, it revisited it, and then it came back up. Looked like it wanted to push back up. So like at 9:30, like right around here, it pushed up, got rejected, and then it was starting to flatten out right here. And I got afraid that I was going to do something like this, like it bounced back up. So I wanted to not have that risk. Plus, I was already short JP Morgan and MU, so I was trying to reduce my risk. I thought maybe we were going to have a couple more candles down, and we just didn't have it until about 10 o'clock. We started to really break down, and then I bought it for 99 cents, which we got a really great price on it. I sold it for 98 cents, but then after that, it really took up to like $1.75. So, you know, we left a little bit of money on the table. We didn't lose it, so it was pretty much a scratch play. Yeah, I'll get to Disney, sure. In your opinion, do you feel bearish toward Monday? I think for me right now, I'm looking for a confirmation. Are we going to try to build an area of support at like SPY 280? Are we trying to build support there? Or are we going to be under it and go to 275? So right now I'm looking for confirmation. Obviously, like, you don't want to be that guy where oh, just because we went up today, you think it's going to go up tomorrow, or just because we went down today, it's going to go down tomorrow. Always wait for that confirmation of your trade idea. So if you have a trade idea and you think, okay, if this happens, where I tend to make a lot of mistakes, and where I think a lot of people tend to make mistakes, is you get a trade idea, but you get too aggressive about it. You get excited about your trade idea and you enter in too early. You're not patient with the confirmation. You're not patient with the setup. So then you enter too early and then you make a mistake and it costs you. Versus like right now, would I be entering just because we closed 280? What if on Monday we open at like 280.50? You know, what if we open up there? Then you're like, oh man, I made a bad decision. But what if we open at 280.50 and then we flush at 278? So right now, for me, I'm waiting for confirmation. Right now, we're right at the area support. I mean, we're right below it. We could push back up, but I need that confirmation. I can't just enter the trade. But I think looking back, like I was saying before, thinking about IBM though, there was a couple ways to make money on this. Shorting these pops, I made a couple dollars this week on it. Iron Condor would have been a great play. However, IV didn't really expand until we started having the sell-off. So could have made money on Iron Condor on here, but this was kind of crazy. The way that you would lose money on IBM this week is, you know, I actually had a 139 put here yesterday, and I closed it just in time for profit. That would have been a max loss, but I closed it yesterday just in time for a small amount of profit. I think I made like 20% on it. But it's better, you know, making 20% consistently, way better than going max loss. You make 20% 5 times, you're at 100%. So, you know, it's way easier to catch those 20% than it is to catch the 100%. I mean, days like today, there are a lot of people that made 100%, 300%. but did you make the 300% because you were good at trading, or did you make it because you were a little bit reckless and you just kind of want to hang on? So you got to kind of evaluate. So I've just been trying to tighten up here. But I mean, IBM, the chart here is super sloppy. But what I've had success this week was when I was at like 140.50 buying the 140 put. I made some money on. I also made money on the 139 put when it dropped down briefly. And then today we had a scratch play that would have been about, you know, a 50% to 70% winner if we let it run. But you got to be careful about those rips. I mean, those will cost you. Those will cost you. Disney, sorry to make you wait. Disney's just been consistently selling off. However, it's flirting. It's flirting here today. I would say was like actually a pretty good day for Disney, all things considered. Even though it did close down 0.4%, 0.40%. You know, it looks more like a consolidation day than a continuation day. Yes, it closed down a little bit. You know, it recovered almost a full dollar. I mean, it went from a low of 107.51 to 109. It has bounced in this area in the past, so you got to be careful. You know, 106. Will it go back down to like 100? It's kind of hard to say. You know, the reason why is it selling off? You know, they just had that merger. You know, kind of the 100 area. The 100 area, there's more stable support. As you can see, there's a lot more stable support. Let's go to the 2-year. Yo, Kit, appreciate you, man. Like the smash button. You know, as you can see here, like the 100 is way more stable. You know, this was a great short though, from 115 down to 108, and it's going to even be a greater short if it goes from like 108 down to 100. So. The one thing that I don't like about Disney, it takes a long time to get to where it wants to go. Minus the last couple days, generally it takes a long time to get to where it wants to go. Like down in here, you just want to kill yourself. Like this is just long. Down and up in here, it's long as well. So you got to kind of time it right and pick key levels and trade it accordingly. Don't, like, if you just bought something in here and you just did like weeklies, you're definitely going to get screwed. Especially in here too. And then, but you see those rip ups and the rip downs are pretty violent. But yeah, Jimbo, I'm glad the volatility is back too, because we were having, it was not fun. You know, when trading options, when there's no volatility, you pretty much just gotta like set it and forget it and go and leave. You know. T5. Spring is in effect. The Bears came out of hibernation and they came hard. Are you saying it's going to be a cold winter? I mean, a cold summer? You know, but I think the market, like, why was the market going up? You know, you have to think about that. Like, why was the market going up? Was it just going up just to go up? Like, why did it get bought up so hard? And the thing is, we didn't have like that great of an earnings season. Earnings season was like kind of, I mean, it wasn't like great. Guys, for the overall market, do you think it's a double top and we're going to make the right side of the second go down? I've been like January and February, I was shorting pretty aggressively because I thought the pops were just way overdone. But as you can see, it doesn't matter. It doesn't really matter what you think. It doesn't matter what what you think. I mean, yes, it does look like you want to try to kind of envision where the market's going. You're not going to make money if you're always one step behind. You're not going to make money in the market if you're always a step behind. You make money when you're a step ahead. If you think you know where the market is going to go, or if you can speculate. So, you know, this does look very toppy here. You know, even up here, like 287. We broke through, but how long did it last us last time we broke through? So this was January of 2018. It was 287 was the high here, and then we broke through in August of 2018. We broke this high here. We broke this, but it only lasted like 2 months until we fell off. It lasted 8 weeks. The all-time highs lasted 8 weeks and we were back down. However, since we had a red year last year, the likelihood of us having another red year is very slim, but it could happen. Let's read these comments here. I consider yesterday a bear trap. Yeah, I mean, it was way overdone. But I mean, this low from 235 to 285, you could be like, man, why did it do that? Like, things aren't necessarily good right now. You know, Fed's saying the global economy is slowing down. They're not going to raise interest rates, which means they're thinking that the economy can't handle it. Also, they're not going to be unloading any of their balance sheet, which means they think that the market can't handle them offloading their stock and all that onto the market. You know, we're due for a reset, but you don't, I mean, how do you time it, right? How do you time it? You know, we're here. Let's go to the you know, from 2011. It was pretty much straight up. I mean, from the lows in 2010, went from like 107, and we more than doubled, almost tripled to 293. You know, so it's not necessarily healthy. Like, we need a reset. Like, I know it sounds weird, but in order for the market to go up, it needs to go down. you know. Earnings were trash. All stayed the same, still more or less than, at least in tech. Yesterday, S&P future bounced off the 200-day. What about today, Daniel? Albert, what's going on? Glad to have you here. Nick just emphasizing that the bears be giving bulls a run. We've been ripping up, and we need to be checked. Yeah, but you know, there was a lot of people. The thing is, like, you kind of have to go with the trend, because there were a lot of people that were shorting for a long time. You know, they were shorting in 2012. They were shorting in 2013. They were definitely, like, the run that we had in 2017. People were shorting every day, over and over, which was stupidity. Like, there was a lot of people. There were a lot of traders just shorting and shorting and shorting, and their payday never came. And then the bears started to get paid a little bit now in February of 2018. But then that was short-lived, because then we went back up to all-time highs. But now we're starting to see some volatility. Like, it wasn't really a flash crash. This was more of a controlled crash. It was more of a drop. I wouldn't say we had a flash crash or anything like drastic. We've just had market drops. Agree with you, Daniel. I agree. You know, these are controlled drops. You know, we're experiencing some more volatility, which is good for you as an options trader. Volatility, it also helps with covering your mistakes. So, like, when I put on a bullish strangle on JP Morgan, I was able to cover up my mistake with that put. You know, as long as you get good pricing, you gotta think about the pricing, and also making sure you're putting in a trade at the right time, and not just putting a trade on just to put a trade on. Because when volatility is high, option prices inflate and contract all the time. They go up, they go down, they go up, go down. But you don't want to be buying options when they're inflated. You want to buy options when they contract a little bit, because that will depend on if you're profitable by 20%, 50%, maybe even 60%. So that's why, like, in this type of market, it's very hard. You don't want to, like, catch the knife, especially on SPY. You don't want to catch the knife, because you're going to overpay, and then it flattens out. So people that bought puts here, it flattened out. So let's say they bought the 280 put, it flattened out. Let's actually look at that. Let's see what happened to the 280 put when it flattened out there. So yeah, when let's see here, what time? 11:30 started to flatten out. So you could see that this put starting to flatten out, went from a high of 175 and it came down to 128, even though it did go a little bit higher, about 30 cents higher or so. You know, it went in the money. But you can see that like timing is tough. So you don't want to always catch these knives, because then, you know, let's say you bought it like $1.50 or $1.60, you're automatically down to $1.22, and then it went to 67 cents. And you kind of think you're kind of kicking yourself. You're like, oh man, and then you cut the loss, and then it rips back up. So that's why you got to make sure that you're not overpaying for options, because that will happen to you and really mess with your brain, mess with your emotions, and mess with your thinking. VTech, Twitter. Yeah, so I guess Twitter and Snap social media was up today on some ad reports. You know, went from that was nuts. Especially like today. But as you can see here, the calls at one point, it was only up 41 cents. The calls were up a couple $1,000%. So it was a really VTech good thing you sold. Because let's look at those. Let's look at the 33 calls on this. 33 calls closed at like 7 cents or so. You know, this is why you want to take your gains, especially on a stock that's moving this fast, like on expiration day. You know, it went from a low of 8 cents to a high of $1.20. You know, that's like what, 3,000%, 4,000% in 30 minutes. In 30 minutes, just went nuts. But then it gave it all back. So that's why you got to be very, very, very careful. Yo, Easy, nice to see you in here, man. Hope you're doing well. That reminds me, I gotta send you a message. Daniel, at 3 p.m., SPY was rejected by the mid VWAP. Yeah, I did see that. I don't try, you know, I don't try to use a lot of indicators. And you can call me whatever you want to call me, but, you know, I look at them for reference, but I try not to have too many indicators, because you have all these things flying at you that may contradict each other. Sometimes they confirm things, but then sometimes the too many indicators kind of, you know, you kind of got to go with what works for you. If RSI or other indicators are working well for you, keep at it, you know. But I tried to, what works for me is keeping it simple and focus on the option pricing. Caught pneumonia, what else can I get on? Man, sorry about that, man. So I thought that today, that because Twitter was so strong, it could have been like a 20% day, but it just didn't happen. You know, it was trying to fill this gap. It did fill the gap, but got rejected here. You know, if it can, I think like 36, 38 level probably. But I don't know if that report was just, looks like that report was just short-lived. I mean, it did close up at 1.26%, but it was weak. It was weak. Less is more with the indicators. Too many causes clutter and confusion. Agree. So you got to be careful. I think also Amazon had some crazy pricing today too. But I mean, Amazon went down 3%. I mean, just see what these are at today. For like 13 cents, went up to $1. Yeah, there was a lot of opportunity. Just kind of, I mean, like these, what are these 1780s here? Yeah, the 1780s this morning, 44 cents to $15 if you held all day, but you can tell it's Friday. Yo, I've been drinking more water. I I drank too much, a little too much in Mexico, so I have to detox for a while. I was also looking at the VWAP, but also today is Friday, and in the last 30 minutes it failed for me. That's a huge sign for Monday. I'm personally long put SPY. Yeah, I was actually thinking today, I wasn't thinking we're going to have a huge down day. After a big up day yesterday, I thought we were going to have some consolidation today so they could kill those premiums. But they just wanted to kill the calls, I guess. Yeah, this one's up 2,000%, 2,200%. You know, but I mean, days like today don't happen all the time, so you can't be like, if you were to do this, if you were to do this normally, you would definitely lose money. It's occasions like this that you would have made money, you know. And most people probably wouldn't have hold the $15. They would have definitely, if they had a 44-cent trade, it went up to $3, they easily would have sold. They bought at 44 cents, it went to $3, they would have sold. If they didn't sell, they would probably sell $1.50, $1.50, $1.20 here. Take the 300% turn, because like, hey, 300% turn on expiration Friday, that's really great, and it could go back up. So, you know, that's why you just gotta go what works for you. Like just take the money and redeploy the capital. Take profits, redeploy capital, or minimize your losses, then redeploy the capital. Don't let your positions go max loss. Like if you go max loss, you just don't want to. We'll just let that spin the whole time, VTech. Thanks. Trolling me in the chat. I didn't even think about it. I just automatically typed it in and I got trolled. Thanks for that. Anyways, any other stocks? We got about 9 minutes left, 8 minutes left. Any other stocks you guys want to look at before we sign off for the weekend? There's about 50 people here. If you're new here, say what up. If you like the content so far, hit like. If you don't like it, hit dislike. Definitely want to know. Drop a message in the chat. They got great options. BA. So I forgot about BA today. So what I've been saying the last couple of days has started to come true is wait for those cancellation orders to come through. And today those cancellation orders came through. I think Indonesia Airways canceled an order of 50 Boeing 787 Maxes. So now we're going to get into a little bit of a dangerous area here where these cancellations, they're going to impact future earnings growth. So that means guidance is going to be down. So just be aware. I'm looking at more downside on Boeing. However, it's expensive to enter because now IV is getting a little bit more inflated and we're coming down to this area here. Albert, Netflix, Rel, appreciate you. Glad you're here. Netflix. Yeah, Netflix doesn't look that great of a trade to me. I mean, yes, it had a great breakout last couple of days, but you have to trade the breakout. But now that it's back into the zone here, it can sit here for a while. As you can see, which it's been doing. It's been pretty much like the 365 area minus some dips and some pops here. The 365 area has been kind of the means here. So you have to trade it when it breaks out. When it dipped below 340, you got to trade that. When it ripped up above 370, you have to trade that and then back. Sanjay. Alibaba, I like the username. Disney for Iron Condor, I would say not. But that's my opinion. Radames, I'm sorry if I butchered that. I don't know. Is it Lamb X? I don't know what Lamb. I don't know what Lamb is. Cisco reworks. I didn't check because yesterday we looked at Cisco was at all-time highs, and that got sold off like everything else. You know, if we go, if the market really tanks, I mean, this is going to be a great short here down to the 50 to the 48 range, maybe even 45. ANET, Sanjay, I got you. The one thing that I don't like, I think that in terms of the chart, I mean, this could definitely come back down to like the 270 area since there's not really support up here. But you got to be very careful trading these options. Not a lot of liquidity on these. Even on the monthlies, not a lot are traded. If you look at the puts here, I mean, it had a 4% down day, but none of these were traded. So it makes it tough. VTech, you lost privileges for the rest of the stream after that. What's the fastest way to see if an option is overflated while trading on Robinhood? You know, honestly, Robinhood stripped out mostly everything, so there's not a good way on Robinhood. If you're using Robinhood, I would use the charting on Thinkorswim, and then execute your trades on Robinhood. But just realize that on Robinhood, the quotes are slower. Jason P. Merit Medical. I don't know what the ticker is for that. Looks like they have a bunch here. Merit Medical Systems. Oh, he's talking about FC. He's talking about LRCX. I know that you trade that a lot. Let's see what the options look like. Chart doesn't look that exciting to me. Yes, it could come down to like the 55 area, but when it's got like 3 points to give, for me, it's not that interesting of a trade. And the options chains, just monthlies. No volume, nothing traded on this today. No volume at all. Not a single call. Well, actually, 5 calls are traded. 5 calls are traded, but no volume at all. There's some open interest, but not a single one of these was traded today. And it had actually a pretty big down day. I would probably stay away from that. Albert, Tesla. Tesla was downgraded today. And I said the other day, just be careful. The trend is still here at making lower highs. So the high up here, another high here, another high here, another high here. It's just on a bearish trend, just like Apple was. But it broke the trend. As you can see here, this was a pretty steep trend here when we were in this. You know, it made a high here, then a high here, high, and it kept going down. So that's what I would say. Tesla probably more likely to be like the 245, 250 range before trying to get back up. 245, 250 is kind of like home bounce range for Tesla, but we'll see if they could push through. How did you look at the yield curve quickly? Yeah, you could check the bonds. LRCX. Yeah, FC volume has been ramping up. I know that LRCX, we looked at it a couple weeks ago or a couple months ago, and the volume wasn't that good, but you're saying the volume is ramping up. So yeah, there are some on the monthly. Let's see what's today. Yeah, some good volume on the puts, decent volume on the calls. Yeah. This looks pretty good. I would trade the breakout though. If it could break out from this 180 area, I would trade that. As you can see, when it broke out, when it broke down, I mean, went to 165, then went pushed back up, and now it's back up to here. So, news alert just came out from Mueller. Has sent his report to the Attorney General signaling the end to the Russia investigation. The whole thing was a joke, I think, anyways. Guy, think Microsoft will get below? I think it's already below, right? Oh no, it closed at 117. So after hours at like 116. So I think it's going to move with the market. It really depends if Monday it's going to be bearish or bullish. But I mean, right around here, it's bounced a couple times. So just be mindful of that. However, there's not really any support here. I mean, my target for it was like 115 to 112 area, and that didn't work out. So I actually, last week, or was it? No, was it this week? This week I did have a Microsoft Strangle on that I sold for like an $8 loss. It went against me. Short AMD, so I'm short MU. AMD is a tough one. I do think it should come down to the 24 level, but is it going to do it or not? You know, AMD kind of just does what it wants. Last week, the 33-cent Strangle hit 950. All right, I'm gonna keep that. Remind me of LRCX. I'm gonna look into getting to know it a little bit better. Realty Solutions. No, I'm just saying the way that they did things is. I'm not saying the actual investigation is a joke. I'm saying the way they went about it. The games that they play. MO Chitty MO. Yeah, this is another one. You got to trade the breakouts. Right now it's just sitting at 55. If it can break to 54, I would trade to 54. If it go to 58, I would trade that. Anyways, we hit an hour. It's been fun, guys. Hope you had a green week. Stay safe, stay green. You know, you guys have a great weekend. Try to relax, sit back, do some studying, study the charts. Let's get some money on. Have a green week next week. Start next week off clean. Stay safe, stay green. It's always us versus her.